Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. All right, good morning. Tuesday, July 19th, 2022. We've got green on the equity futures this morning, a little bit of a bounce back. Yesterday's give up. Just might as well talk about it now. As soon as that Apple sort of news or rumor or leak came out about decreased hiring intentions for 2023 for some of the teams, market pretty much is sold off from there. Probably not an accident in terms of that news being out there. Apple could very likely be trying to temper expectations for investors in the market heading into 2023. That would not be out of the question. It would not be illogical, in my opinion. Just kind of an FYI. One of the things that is happening, though, you're getting continued pullback in the U.S. dollar out there, which is very welcome. And is having a positive sort of impact on risk assets over here in general. You've got some hawkish commentary out of Australia, also helping to put a little bit of pressure on the dollar. And you've also got rumors of a potential 50 bip hike from the ECB on Thursday. That would obviously be a little bit of a surprise and benefit the euro, no question, versus the dollar, given current levels. So you've got all that going on. The result is a pullback in the dollar. Gold not really doing much. Poor gold can't mount anything, but it's got the potential to. With the dollar pulling back, maybe it'll go on a little bit of a tiny run. GDXJ, the juniors are trading up a little bit this morning, but we'll see. And I've been talking a lot about just the positioning and just how uninvolved people are. B of A with a new fund manager survey out today, taking a look at levels of cash and what have you. They talked about the net percentage taking higher than normal risk, being at new lows, not seen since October of 2000. I think it was October of 2008. The percentage of fund managers that say they're overweight equities versus cash, lowest since 08, pretty much tied with 08. That could explain a lot of why the VIX is just so punkish in terms of it might go on a run for a little bit, elevate itself for a day or two, but then just really retreats. I think people have, by and large, maybe have done it, right? Done the selling, done the hedging, I think more than anything, just done the selling. They've got enough cash, they're less worried about hedging their equity exposure than they would normally be. So anyway, let's see how that trend plays out. But I think a lot of that really explains what's going on with the VIX. And finally, aerospace and defense, Lockheed Martin with a really sleepy earnings report this morning. Stock looking down between 2 and 3% right now. Not unexpected if you look at how the stock has reacted recently. It's pulled back quite a bit. But if you're uninvolved in aerospace and defense, in my opinion, this is an area that's undergoing a secular growth trend, shall we say, with Russia doing their thing, potentially China doing its thing with regard to Taiwan or what have you. I think the desire for nations to want to protect themselves militarily is at a level where it probably hasn't been in a very long time. So with that in mind, let the sellers do their thing on like a Lockheed or what have you, but as these stocks are going to trade at a discount to the S&P 500 itself, and with some pretty, again, I think some pretty strong secular growth trends intact, wouldn't be shy about picking up some shares. So obviously Lockheed Martin, Raytheon, General Dynamics, Northrop Grumman. We own a little bit of Lockheed still. We owned a lot more earlier, but sold it higher. We've got about a 1% position on right now. We do own a little more Raytheon. We did actually sell some yesterday, just sort of the thought that these prints could be a little bit light. So we're going to hang out with those two levels for now, but we'll probably add to Lockheed over the next few days. That is it. Have an awesome day out there, and talk to you soon.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.